Woman yields back. The gentleman from Florida, Mr. Donalds, is recognized for 5 minutes.
Thank you, Mr. Chairman. I'm not even going to get into it. Thank you so much. Mr. Kennedy, how has the regulatory structure imposed by Dodd-Frank negatively impacted community banking in the United States?
I think it was about 1,000 pages of legislation by Congress and probably 10 times that of regulations that were issued under that act.
Okay. And specifically, in your view, has community banking in the country, frankly, been devastated by Dodd-Frank?
Yes, when you step, I mean, it was done to react to a problem or series of problems, clearly, but it was an overreaction, and it applied to every bank in the country and beyond. And so it's, in stepping back, it's a serious problem. It's overregulation.
Okay, thank you. Ms. Rainey, can you discuss how increasing the asset threshold for small bank holding companies could help with capital formation?
Yes, I appreciate the question. So as we increase that threshold, what we allow these smaller bank holding companies to do is to grow, to lend more, and potentially partner with other smaller community institutions to keep that presence in the local community.
Okay, awesome. And do you believe that a proliferation of small banks and small bank holding companies would be better in terms of addressing the needs of capital for individuals, micro businesses, and small businesses?
It is the answer, and that historically, when we look at the footprint of small businesses in this country, which is unlike anywhere else in the world, we can attribute it directly to the presence of small banks and those that are on the ground that are taking that local capital and redeploying it to small businesses so that they can grow and create additional capital for that community.
All right, thank you. Ms. Owens, can you describe the role community banks can play in revitalizing local economies and uplifting American communities?
Absolutely. I'm a proponent of the ACRE access to credit for rural communities, which will provide lower interest rate loans as well as additional credit to our rural communities and our farmers and our ranchers, to the agriculture that is so vital to not only my state, but our country.
Okay, thank you. Ms. Marshall, what immediate action can Congress take to address the regulatory cliffs you mentioned in your testimony?
I think starting with the static thresholds that have existed, we need to review those. There need to be indexed for the current environment, the current economy, so that banks can continue to grow and expand alongside that economy and not fear that they, as they approach us, arbitrary asset threshold, that they either need to pull back from their operations or, quite frankly, seek another alternative. We need to let them continue to grow alongside in the natural pace that they will be able to keep up from a risk management standpoint. And we need to take that stigma away that there is something magical or something horrible that happens when you cross over to be a $10 billion bank. As I said earlier, $10 billion is not the threshold that should define a community bank.
Let me ask you, Ms. Marshall, to follow up, what do you think the threshold is that should be defining community banks in the United States?
Something north, I've never been asked that, Mr. Donalds, thank you very much. Certainly something north of 10, maybe something less than 100.
Fair enough. No, and I understand why you don't want to, as a former community banker, I understand that a $10 billion bank, although it is big, quote unquote, you're not talking about the national banks, which are massively larger than
Correct.
$10 billion. I do acknowledge that. One before I yield, Mr. Chairman, it was raised about the Bank of North Dakota. And as a former banker, or I would say a recovering banker, the state of North Dakota, the reason why they had to create a state bank is because there was no ability for any lending to occur because there was no banks in the state of North Dakota. I'm quite sure every American understands, especially people from North Dakota, that it is a very rural state. It can be a very tough state, and there was not a lot of banks that could survive in that climate. So the state of North Dakota decided, I believe in around 1910, 1920, decided to create a state bank in North Dakota. It still remains to this day. I know that there are people in other states who've brought up the idea of creating a state bank. But the reality is that commercial banking has been able to supply the needs in everybody's cities and economies. And there are now obviously community banks and other banks that operate in the state of North Dakota. So I don't think that the topic of raising a state bank is the panacea to whatever the ills might be coming from the other side of the aisle. The real cure is unwinding the regulatory behemoth that is Dodd-Frank. I yield, Mr. Chairman.
Gentleman yields back. Gentleman from New York.